In this video, we are going to revise monetary economics key points for UPSC CSE. Hello friends, welcome to the Tapasya for IS YouTube channel. So let's begin. Fundamentals of money: medium of exchange, unit of account, store of value. Types: fiat, government order, rupee; fiduciary, trust-based check; full-bodied, intrinsic value, face value, silver coins. Evolution: barter, community, metal, paper, plastic, digital, crypto, and CBDC. This is the latest one. Barter limitations: double coincidence of wants, indivisibility. Functions: primary, medium of exchange, measure of value; secondary, store of value, deferred payment, transfer of power; contingent, basis of credit; income distribution, liquidity. Money supply and aggregate. Money supply: total stock of money issued by RBI notes, Ministry of Finance coins. Aggregates: M0, reserve money, high powered money, currency in circulation, plus bankers deposit with RBI, most liquid. NM1, narrow money, currency with public plus demand deposit, other deposit with RBI. NM3, broad money, NM1 plus all time deposit, least liquid of the M series. Liquidity trend: M0, less than, more than. This leads to NM1 and further NM2, NM3, L1, L2, L3. This is trends. Indian rupees symbols. Rupees adopted in 2010, designed by D. Uday Kumar. Money creation mechanism: fractional reserve banking. RBI injects high powered money by buying securities. Money multiplier: M equal to 1 by RDR. A higher RDR reserve deposit ratio leads to lower multiplier. Velocity of money: rate at which money circulates. High velocity indicates an active economy. Monetary policy objective: price stability, its primary objective. Growth, financial stability. Framework: flexible inflation targeting FIT 2016. Target 4% CPI with A plus minus 2% tolerance band. Monetary Policy Committee MPC. Members 6. 3 RBI, 3 government. RBI governors is the chairperson. Decisions: majority votes. Governor has casting vote. Rules: quantitative volume waste, LAF corridor, MSF ceiling, leads to repo rate middle, leads to SDF floor. Policy repo rate: banks borrow short term from RBI, currency rate 6.50%, hypothetical. SDF rate: RBI absorbs liquidity from banks without collateral, current notes 6.25%, hypothetical. MSF rate: penal rate for overnight borrowing from RBI, current rate 6.75%, hypothetical. CRR: banks cash reserve with RBI, current rate 4.50%, it's hypothetical, no interest. SLR: liquid assets held by banks, current rate 18%, hypothetical. OMO: RBI buys sells government securities to manage liquidity. Operation twist: simultaneous buying of long term and selling of short term government securities to lower long term rates. Qualitative selective: margin requirement, limits loan to value ratio. Credit rationing: directing credit to specific sector, example PSO. Moral suasion: RBI persuade banks to follow policy. Monetary policy transmission and challenges. Transmission: policy rate changes, bank lending rates, borrowing, spending, economic activity. MCLR: marginal cost of funds based lending rate, introduced in April 2016 to improve policy transmission, more sensitive to repo rate changes than old base rate system. Challenges to transmission: banks low dependency on RBI's repo facility, Rigid saving deposit rates, financial repression due to SLR, PSL requirements, competition from other saving instruments, asymmetric MCLR transmission, quantitative theory of money, QTM, Fisher's equation, M equal to PT, price level, P is directly proportional to money supply M if velocity V and transaction T are constant. Cambridge equation, M equal to KPY, emphasize the demand for money as a store of value. Key ratio and trends. Currency deposit ratio, CDR, currency in circulation to bank deposit, money multiplier, total money supply to reserve money. Currency GDP ratio indicates extent of cash uses in the economy. Trends as of financial year 2023. Hypothetical, M0 and M3 growth have been moderate, driven by factors like aggregate deposit and credit to government.